Hey, it's Mack with PriceActionTradingSystem.com, and it is Tuesday. It's May the 6th. This will be our chart lesson for today. I couldn't remember if it was Tuesday or Wednesday. It's been a crazy day for me. I've been extremely busy trying to trade and all that. I spent most of the morning talking with our contact at AMP Futures for our group rates, and I was able to negotiate us a super group rate, better than what we already have. I won't. I'm not going to publicize that on the video. If you're one of our group members, there'll be something posted on it on the in the premium section later. And if you're not a member of the premium section, but you bought one of our either the price action manual or the scalping manual, just drop me an email if you want some more details, and I'll try to provide those for you. But we got some great rates, better than what we already had. And they're working on something that will even get them lower if he can work out something with NinjaTrader to be able to get the uh, uh, actually, let me back up a step. Currently we use CQG for our data, but there's another data provider that AMP has, but right now they do not have historical data, so that's not going to do us any good. We can't use that provider, but the data is good. But if they set up the historical data for if NinjaTrader, if he gets that set up, then we're going to have a just almost, almost unbelievable rate. Uh, there is one catch to that. You have to have a full license to NinjaTrader, which if you're going to trade full time, you need to have anyway, and it will pay for itself in the long run based on the rate we're going to get. And like I said, I don't want to say the rates publicly out on the videos because they're for our members. But trust me, it'll make our current rate look pitiful. So if that tells you anything there. So it's really exciting, and I hope that works out. But at the very least, I've already got us a 30-cent cut off of what we already had, regardless of what you use for your opening amount. Used to, you had to open with a minimum of 10 grand in order to get the best rate, but he's waived that for our group now, and so we get a standard rate for everybody. No matter as long if no matter how much you open your account with, whatever you got to use, whatever their minimum is. I think it's $500 or something, but uh, you're gonna like these rates. That's all I can say. And if we get this trading technologies, uh, the historical data set up, the rates are just gonna be out of this world, unbelievable. So. I don't believe anybody else can match those rates either. So it's some great rates. So enough about that. Here's what I saw today. We had a nice move down. We went into a range, and then we got a second leg down. There's a bigger channel. I talked about this in our midday chart post that I wasn't sure about this bigger channel. But when we came back a couple more times, and you can see we bounced right off of it. I'm still not quite sure if the low is going to be right here. Maybe it's right through here, and we just got an overshoot here. I'm not sure, but it wouldn't surprise me if we don't go to here before it's over. So this is your measured move off of this leg here, and so that gave you a target. You might have measured from here, but when this ended up still being part of that range, I think that the second leg started down right here, and so I'm looking for, to see prices. It's so late in the day. I mean, the market, well, that's only 2:15. I thought it was 3:15 almost. So we'll see if we get here or not, or if maybe this is it. We'll just have to see. And maybe this is it right here, and we've already met our target. So, but I'm kind of playing it here because this is when the downtrend really started back again right here. This was still part of this range. We failed out the top, came down, failed out the bottom, got back in the range, and finally broke lower when this bigger trend line held. And so my initial feeling that we had a bigger trend channel was correct, and there's probably even a midline in here. You can see that right there. You don't have to, doesn't take a rocket scientist to see that. There is a midline in there. It's not as prevalent or as important today, but it's there all the same. So, but that's what I see today, and we'll talk about the trades. There's one lone long trade here that I really liked. And you might have even considered going long here. I went back and forth about that one. We'll make it green uh, because it's obvious this is a range. And I actually meant to circle most of this right here and the lavender, because by the time you saw that, I think it was better just to sit tight and stay away from that. It's always in the middle where it's real indecisive. The best trades are off the highs or off the lows. And the bias was down, so you had to be real careful about going long. And the reason I like this one is there's a trap. Notice the new low, first entry short, second entry short. It bounced right off the original range. And so I like that one for a long, easy scalp right there. Um, but that's what I saw today. Let's talk about the trades. If I have enough time, if the trades go quickly enough, I may put a couple of charts on that people sent me and answer a couple of questions like that. We'll see. But early on, we had a trend working down. This was the first trade of the day that I saw. It's, it's really a two-legged pullback in a couple of different ways. Notice this new low, move up, pull back, second leg up, right to the EMA. It's the first break of the trend line. There's a little bit of overlap, but there is a failed second entry long. Notice that new high, first entry pullback, second entry, it fails and turns down. There's a trap there, so I like that one. It's a little more aggressive because there is some overlap. It's so close to the lows, but it worked on down. I don't think you could take this one because now you've got the break and a new low. Too big a chance that you turn down right there and then turn back up, and that's basically what happened, but I think there was enough room to scalp out there. And then you get a two-legged correction. You get a second entry short right here. There's a little bit of overlap right there. So I went back and forth whether or not to make that one green. But the fact that it broke higher, I kind of liked it. I really think it ought to be green, so I'm going to go ahead and change it. It's a second entry short. Let me move this and make this a little bigger too. It's a second entry short, but notice by the time it broke, you had a lot of overlap there, but it's like a little trading range and you got a failed break out the top, but it could have easily just as easily broke lower and failed out the low side. So I think that one's a little bit aggressive, so I'm going to leave it green. And you don't want to be going long in here yet. You had a little trend line working up, but you got a break already. This looks more like a range starting, especially when you got up here and got hung up and went down. There is a failed second entry long there, so there's a trap. So you might have thought about going short, but it's so close right here. Somebody else sent me their chart, and they had a much better looking setup here than me, and that's the one I'll try to put up if I get a chance. But then we had two legs down. Notice this, you got one leg correction, and then you got another two legs and a second leg down. So this is a second entry long. It's a failed breakout the low. It's a reversal bar. So you probably want to use a limit order here. Wait on it to break higher and then drop your limit order. And there is a trap right here. It's really close to the high. I went back and forth. I actually took that trade myself. But looking back on it, it looks a little risky. But there is that trap. Notice the new low, first entry short, pull back, second entry short, and it goes higher. So let's just go ahead and mark it green. It was good enough for me, and it worked fairly easily too. So for that matter, and you had to think that maybe there's a trend line up here that we're heading to. And originally, I think I had it just like that, and I still think that's okay. It still fits pretty good, pretty well. But I'm going to make that one green because the bias is down and this is real flat and this is a trading range and that's going long right at the high. So you really got to be trusting it to go long there, or you really got to understand what's going on, which is the fact that there may be a bigger channel in here and we got to work up to it. And then you get up here to the top and it turned down right where, and when it pulls back and tests it right there, I liked going short right there, especially when it went higher again and tested it and then turned down. Look how that opened on its high, closed on its low. You had to be quick on this one. If you probably had to use a limit order right there where your stop would have been, but it would fill it. At least it would on my chart. You might have had a little different setup, and that was a quick, easy move down. Nice move. And then there's another two-legged correction back to the trend line right here. And this one got some people right in here, I think. Um, there's a second entry short right here, but look at all that overlap, and you got all those bars, and you got the range. You're back in the range, so there's a good chance it's going to shoot down and fail and then go up, and so that's why I like that for a long. It's back in the range. There's a failed second entry short. No reason to go short there for sure, especially if you drew this correction going here. You got to wait on the break, and this was the break, and then there's two legs up to a new high. It found resistance right at the previous trend line, right at the high of the range, and off it goes down again. And it comes back, and you get a second entry long right here. I really don't think you could go short below this bar here, but when you got this bar, a break below it, just drop you a limit order in there. And even if you didn't do that, when you got this bar, I mean, that's very bearish. Just put a stop below it. Maybe use a limit order, but if you use a limit order, you couldn't get more than about a tick fill on it. And then you get the failed second entry long right there. And look at that bearish bar. Just go short right there, and then off. It takes a minute, but off it goes. And then it comes back, and there's a channel here. I don't know where the other side of my channel went. There's a channel right there, and it comes back. I wanted to change this one to green. I went back and forth on this one. It's a first entry, but this is a for sure channel coming down through here. And look how bearish that bar is. Aggressive trader. I mean, you're not going to get second entries on a lot of these trades. So, should that one be green? I don't know. It's right on the borderline of being aggressive, so I'm going to leave it red because it's right off that trend line. And somebody, let me say this real quick before I forget. I always get questions about runners. Notice where all your runners take off. Right off this trend line, right off this trend line, right off the trend line, right off this trend line, right off this trend line, right off this one. So that's where you're looking for your runners, right off the real strong support and resistance areas. The EMA occasionally, but you see you still get a lot of bounce in here. It's generally, if you're reading this trend line right, that's where your best runners are going to occur. And it's the same thing on the way up if you get a bigger channel than this. So when you're trying to get runners, that's where to maybe try to hold on to them off of those trend lines. And of course, you got to be reading it right. Based on this bounce right here, I'm guessing that this trend line, this channel line is right there. And we just got an overshoot a couple of times. That's the way I'm going to look at it as of now. I would move it up and play it right there because we bounced there just too many times. So we're probably headed back to the upper side now. So anyway, then you get another first entry here. This one, we broke the channel. There's a good chance it could snap down and go back. That's a really bearish bar right there, and that's almost the same thing as a double top. So aggressive trader with a bearish bar like that's probably going to go short right there. Okay, I had a slight interruption there. But yeah, this is a second entry short. Count from here, first entry, pull back, second entry. And even on a smaller scale, there's a low that's lower than that right there. One leg up, correction, second leg up. So it's a double, kind of triple top. And look how each one of these highs are a little bit lower. You're losing steam there. And you actually could have entered here too. I didn't like it as much then because there's a lot of overlap, but it did tick higher. If this would have closed on its low, I would have liked it better. And that's all I marked for today. It's 2:30 now. I'd be real careful. We're probably going to correct back up to the upper side at a minimum. I'd be careful about trading this late in the day. What else did I want to talk about? I want to talk about signal bars. What a good signal bar. Somebody got confused thinking if there's some stem above. Look how bearish this bar is. Let me explain this. This bar was trading way up here. It traded higher, and then it turned down, and it traded all the way down and closed on its low. If you're looking to go short, a bunch of stem on this side of your bar, let me just make this a little bigger. If you're looking to go short, you're not too worried about a lot of stem on the top. That just shows weakness because price is traded up there. That is a beautiful reversal bar. That's the kind you like to see before you go short. So you're not worried about a stem on this side. In fact, the bigger the stem, sometimes the better. Let's see if I can just find one. That's a one right there. That's a nice bearish bar. Here's one right. That's a beautiful. Look how bearish that bar is. It opened, it traded way up here high, and it turned and went out the other side and closed. That's a beautiful. You're not worried. If you're looking to go short, you're not worried about stem on this side. You're only worried about stem on the low side, because stem on the upside is a good thing. Now this one you got stem on both sides, so you want to be concerned about that one. But this one, if you're going short, now if you're going long, this didn't quite close on its high, but look at it traded down, reversed, closed almost on its high, and then it went higher. That's what reversal bars look like. Here's one, and then there's another one. That's telling you that the buyers or the sellers were trying to come in, and they were getting overwhelmed down there. And up here, the buyers were trying to come in, but they were getting overwhelmed by sellers. And look what happens. And so I hope that's clear about stems to the trader that was asking me, that was confused about stems. If you're going long, if you're in an uptrend, you don't care about stems on the low side. You're only worried about them on the high side. A stem on this low side means nothing. In fact, it could be a good thing. It means that the sellers are trying and they're getting overwhelmed and left behind. Here's a great reversal bar. That's a beautiful reversal bar, and look what it led to. Big move. So those are, and here's a great reversal bar from the upside, and look, it led to a good sell-off. So make sure that's clear to you. Here's one right here. Even though that looks like a doji, that's a real bearish bar, because prices opened here, traded up here, and by the time that bar closed, they beat it all the way back down. That's a bearish sign, and look what it led to, a big trend in the overnight. So I hope that's clear on that part. Let me see what else there was over here that I wanted to talk about. I'm going to pause it. Okay, here's a trader's chart, and he was asking about this sell-off here. It was a second entry short, and it doesn't look too bad on his chart, other than you had an overshoot if you're going by his channel here, but the problem is he's missing the bigger, he doesn't see the bigger channel here, and he doesn't realize that's where we're headed back to. And as you can see on my chart, you know, I had it too low to begin with, and so we had just come off the low side. This is where this occurs, and it moves down, and so he went short right in here. Now look at the difference in my chart. Look at all the overlap right there. Plus I have the channel working up, and I'm waiting on a break and a retest with a high before it goes lower again, which is exactly, you got this little channel working up. You've actually got one that looks like it's working down as well. Looking back at it, maybe this one here was more like this right here, and that was the break in the new low. But anyway, the main thing is by this time you got this channel working up, you got a break and two legs to a new high right off the bigger channel, and then the downtrend starts again. But look here at all the overlap too, because that is a very bearish bar, and it took a while for it to work up here. So that just shows you there's no real serious buying, but there's nobody willing, you know, the sellers hadn't really started coming back in again yet. So here's what it looks like on his chart. He's got this moving down right here, and I like the way that channel looks. And you do end up getting your low, but he doesn't have anything drawn on this correction here. And notice how you don't have all that overlap. He just doesn't seem to have as many bars as me. So I can't remember who sent me this. This was, I don't want to call anybody's name in the video. But if you recognize your chart, I'm assuming you're using CQG, which is what we are, and this is a 2000 tick. But if you're using a different data provider, you might try adding a few more ticks. I'm just going to look at, because he just doesn't seem to have the same as many bars as I do. Maybe he does, and his just didn't start overlap until a little later than mine did. Um, it just, but you can see on mine, that's not a very good setup. Look at all those overlapping bars, and those are stacked side by side. That's what we're looking for. But anyway, I hope that's clear why I didn't like the trade. On his, it looks a little better. Um, you know, the only thing I can tell you is if you'd drawn this trend channel, you'd have probably seen that that was the first break, and you want to wait on a little retest, and then you don't really get a good setup again till right here, maybe even right here, depending on what your chart looked like. And I think there was one other chart I'm going to pause. Okay, this trader asked me about a trade. Right here, there's a short. And no, I didn't like this trade because this is right in all that overlap. And you do have the range. He has the range on here. And the thing is, if he'd have went short below that bar, maybe because look at the new high, first entry, pull back, second entry long. So if he'd have went short right there, maybe, and that would have worked. But waiting till here, right here, you're too close to those lows. And you see what happened. It bounced instantly and went higher and then started down. So I do not like that setup. I like this one better on your chart because it does allow you to get short near the high with enough room to maybe get out. But if you go back to my chart, you can see that by the time you got the failed second entry long, you can't get short until way down here, and then you got a doji that closed up here. So no, actually, let's just see if that worked on mine. I don't think it would have. A stop would have got you in at 71, and it would have worked. But I think it's real risky because you don't know you're going to get those stems down there. Notice it closed right inside the range there. And so I think it's just a little too much overlap. It would have worked even on my chart, and mainly only because there's a trap there. You got that new high, pull back first entry, pull back second entry that fails, and his chart has that as well. So maybe notice that new high, pull back first entry, pull, and it even looks better on his chart than it does mine. And the fact that he's got that bar that opened, it's one of those long stems that closed on its very low. It opened right here, traded up, and that's pretty bearish. But he's actually marking it on this break on the second entry, I guess is what he's doing. I'm not sure why he's marking it right here. I'm assuming he's talking about going short on that big bearish bar, but no, you don't want to. You're having to get in way down here. And even though there's a bearish tint, we're past time for a correction. And he does have the bigger channel. And you notice we just came off of it. So what are the odds? I mean, sometimes you don't get through to go to the other side, but what are the odds tell us is going to happen? We're probably going to the other side, back to the trend line, because we hadn't tested that in a while. And we tested this one 1, 2, 3, 3 times in a row, and we really couldn't go lower because we tested this once, twice, and that's like this is your new low, and you tested it once and now twice, and it failed, and so it reverses. So I hope that's clear, and we'll back out of this just to give everybody a look at the big picture again. And so if you saw the midday chart, you know, I had this on here, I had the range. I think we were maybe working up here or something at that point. I can't remember because I was a lot of distractions this morning. But I was not quite sure about the bigger channel. I had it on here like so, but I wasn't quite sure about it yet because we didn't have enough price action. But as you see, as the day unfolded, I was reading it exactly right, except for maybe this line here. And I'm thinking that we probably, this is the channel, and we just got an overshoot here. So, and it could be that this one's a little lower up here, like so, and we got an overshoot up here as well, or maybe even like that. And you got the overshoot here on, because you got matching overshoot. So, but you don't have to get it exactly right on these bigger ones. You just got to be close. And you can see that's obvious right there. I mean, it was pretty obvious to me at 9:30 this morning or whatever when I posted this. I think it was right after I think we'd already turned down there and we were maybe working down or something. So it was pretty obvious to me at that point. And of course, I got more experience at it, and I look at this every day. And so it takes a while to learn this stuff. You can't pick it up overnight. So if you couldn't see that, just keep working on it. Just understand that when you see a big move like that, and then you start correcting, that there's a good chance that there might be another channel. Either we're going to have a range day, or maybe there's another channel in here, a bigger picture that you're missing. So just look around for it. And always double check and recheck and things like that while you're waiting on setups. Keep studying your chart and looking at different opportunities. But be careful. At the same time I say that, I will say be careful, because you'll get so many lines on here, then you'll be totally confused and you won't know heads from tails. And you'll be mad at yourself because you'll confuse yourself. So be reasonable about it, but also be open to, making sure you see everything. So I hope that's clear. But I'm going to wrap this day up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.